on, people? Luke here from LAGFX, back with another Sunday Sessions video. In today's episode, I'm going to be going over two Forex pairs for you today. Well, I say two Forex pairs. I've got a Forex pair and a precious metal. So we're going to go over Euro USD first, and then we're going to move over to XAU USD. I'm going to quickly run over my bias and my thoughts for these markets, and give you ideas and ways that we can look to capitalize on these markets in the coming week. Then what I'm going to do is pass you over to James. James is going to run over the markets he's looking at, give you his bias, and yeah, hopefully you can take some kind of knowledge. Hopefully we can give you some kind of edge as well for the week coming, and you can profit alongside us. So jumping straight into things, we have here the Euro USD market. If you have been watching our Sunday Sessions videos, you'll know my overall bias for this market is to be a buyer. We have a higher time frame target, which if we zoom out, we can see here, we want price to actually travel all the way back up into our POI. We have our fib box here as well, which is great. Once we have that tap, that penetration into this point of interest, we can then look to trade this market lower down. But before that, we want to be buyers and get involved in the buy before the heavy sell-off. So zooming back in, we can see how we had a break of structure here. This low was broken with this low being set, so we knew that there was going to be a continuation in bearishness, which was great. We found a point of interest here that price came to tap perfectly into. This then gave this market momentum to take a new leg higher, which we have seen. So we managed to catch a nice trade on Friday. I think it was Friday, it might have been Thursday actually, on this market. I sent out the potential for an opportunity to be placed here. Some of the clients took it, some of them didn't. Obviously we didn't give any specific parameters. I just put out the trade that I would look to place if I was still active in the market, and then it was up to you whether you took it. So I'll throw some screenshots up of that and you can see for yourself. Then we have seen price obviously continue up in this bullish manner, and then just zooming in again slightly, we can see how we've had another break of structure. So this confirms bearishness moving forward, which we have seen present itself. We've seen those lower highs and lower lows being created. So we want to try and find some kind of point of interest, some kind of area that we want to see price come to in order to take its next push up, you know, by grabbing that demand that's lower down in the market. So we can use numerous things. Obviously, I like to use my fib box, so marking the start and the end of the impulse. This gives us our golden ratio. So we could, you know, put this here. That would be our fib box. And then we can also look for some kind of area that has yet to be mitigated within the markets. And I've also highlighted that as well. So it would be nice and it would be interesting to see price come as low as this point, tap in, and then see a new leg be created, taking us higher up. So obviously wanting to be buyers temporarily in this market, I will be waiting for price to come down, show signs of rejection around this area, and then as soon as we have a break of structure or a displacement to the upside, that's when I'll be looking to get involved in those buy positions. Look for this area, take note of this area. So as you can see, 1.0686. Take note of this area. Obviously do your own analysis and try and find points of interest for yourself. Again, implement the Fibonacci retracement tool, and then whatever else you use to find these reversal zones, you know, take that into consideration as well. But for me, that's where I'll be looking for, these two areas here. Okay, so moving over to the XAU USD market. This isn't a market that I've actually traded in a while. It is one of my favorite pairs to trade. You know, it offers a lot of volatility, a lot of price action, and we can make a substantial amount of money from the swings that it creates. But just with what's been going on recently, fundamentally, I just haven't bothered. As you know, I'm a technical trader, but it's very it's very sensitive to fundamental news, is this pair. So we have just taken it upon ourselves to shy away from it for the time being. But what's interesting is I actually did do some analysis on this. It may have been a few weeks back. I'll try and find the footage and put that video up now of the YouTube video that we created for the Sunday sessions, and you'll see how I actually had a point of interest that I had found here and I had set out. And as we can see, price has actually tapped into this perfectly and shown us great signs of bearishness. So this was a move that we could have taken advantage of, but because it tapped into this area 2 o'clock in the morning, obviously I wasn't active at 2 o'clock in the morning, so we did miss this opportunity. And to be honest with you, I hadn't set an alert for it either. But it's good to see that, you know, the analysis that we have done for this pair has played off perfectly. Now you're probably thinking, well, we could have actually set a pending order there, and you're right, we could have done. But on the off chance that price actually blew through our zone, we would have been stopped out. I do actually like to monitor price when it actually approaches these points of interest, just to see that displacement and that rejection from that zone, just so I've got that extra confirmation. You know, because you can place these pending orders and you can leave them to run, and obviously it gives us more risk with our positions because we aren't able to monitor them, or we do forget about them. So what I should have done realistically is set an alert, and then once it's gone off, then looked and monitored it, and then we could have actually taken advantage of this. Obviously, this is a lesson learned for me moving forward. But yeah, as I say, it's nice to see that our analysis is actually playing out nicely. So moving forward, how are we actually going to tackle this market? Well, you can see that I've actually set another point of interest within this leg down so far. And we've seen price tap into this again as of very recently, just before the close. So come the open, this could be an opportunity for you guys to actually take advantage of. Now we have seen a lower high be created. This will be confirmed once we see this low break. Once we have that, we can then look to get in on the next pullback, on the next retracement, and continue to ride price down. I have a level of demand set about 200 pips away, 2 to 300 pips away, so we can look to ride price down to this zone here before we may look to go long on this market. So yeah, just be mindful on the open. Could be a good opportunity to actually get in on those sell positions with gold. As I say, just wait for that further confirmation. What I would do is set an alert here, so that's what I'm going to do now. Set an alert here, wait for price to break below this low. Once we have that, a new lower high get created. That would be confirmation for me that, you know, price is now moving bearish again. This retest has finished, and as I say, we can look to go short right down to our demand zone, and then we can look to go long, assuming we have the right confirmation that price is ready to do so. Now, just to give you more context, what I'll do is actually draw out my predictions with this. So price comes down, breaks this low, that's great, that's a break of structure. Price comes back up, sets a lower high. We will then jump on the market as soon as we have confirmation that price is ready to take its next leg down. So, you know, a fractal displacement and break of structure here, then we will look to go short, and we'll continue to ride that down. So if we just imagine a short position being placed here with a very refined entry and stop loss. If we were to be safe, we got in, say, 1850. We had our stop loss even above the high that was created when it tapped into our point of interest. So we've got a stop loss of 10 pips, if that. And then imagine having a take profit target, which we know is more than achievable with gold, all the way down here. So we just zoom out. We had our take profit target all the way down here. We can see that we had a stop loss of 10 pips and a take profit of 180 pips. That would give us a 1 to 18 risk to reward ratio. Now, if you're risking 2% of your equity, you're looking at 18 RR, which would be 36%. So as I say, this would be a brilliant opportunity for you guys to get involved in. Just make sure that you have the right confirmation. But I do believe price is going to go short, and we have that demand zone there as well. Now, there's no reason to say that price wouldn't actually go lower than this, but this is probably the lowest point I would like to see price go to before we have some kind of interruption in price. Been very quick, very brief with my analysis on these two pairs. I'm not seeing too much in the markets. The markets are a bit all over the place. We managed to capitalize on a few good trades last week, a few scalp-like trades, and then we had one or two longer-term trades that we held throughout the day and the evenings. But as I say, we are looking to go long on Euro USD. We are looking to go short temporarily on XAU USD and then potentially go long, assuming we have rejection from this demand zone here. Now, what I'm going to do is pass you over to James. He's going to run through his analysis, give you his bias on the pairs that he's looking to capitalize on this week. If you do enjoy the video, and you have enjoyed the video so far, don't forget to leave it a like. All the support you guys provide us with is very much appreciated. If you have any questions, if you're unsure about anything that we have provided throughout the video, don't forget to leave it in the comments below and we will reply to you as soon as possible. Now, without further ado, I'll pass you over to James, our head analyst at LAGFX.
Hey everybody, hope we're all doing well. James here from LAGFX. I hope you've enjoyed Luke's analysis, but I'm going to start off here on the euro to the US dollar. Everybody who knows me probably knows the two main markets that I'm trading most of the time is the euro to the US dollar and the dollar to the Japanese yen. I just find that these are the most liquid and honestly just provide me with more trading opportunities throughout the day because I like to take intraday trades and I guess more of a scalp-like technique or approach to the markets. It just has the liquidity and volatility within the market to provide many setups in the day. So we're just not like waiting around for things to play out. We have a lot happening in the markets, making it slightly easier in my eyes to trade. So I always like to start off on a higher time frame just to give my overall outlook and the higher time frame bias that we are working off, because that is the most important thing to do, is establish what our higher time frame bias is, what price is wanting to do longer term, because price is always going to follow its higher time frame bias. So we know for a very long time price has been trading as bearish, and looking more recently inside of the bearishness that has been bringing us lower, we can see that we've had impulsive wave, correction, impulse. Now this move higher right here to come to displace what should have been a protected high, therefore in my eyes I'm taking this as a blue box. So quite simply the very first impulsive wave of this wider scheme correctional wave that we are potentially putting in. So looking inside of this, I'm seeing this as either A, a distribution, or B, a reaccumulation until one of our parameters is hit, whether that be start to break the low or surpass the high. We don't know which one it is because of course the first few phases of both are very similar. But regardless, looking into it a bit further, we had this point of interest since about the 23rd of May. Price left over a very nice demand zone in the market and we're waiting for a very long time for this to tap. I thought it was going to be this move back down that would come to bring us and tap, mitigate that zone. Fortunately not. However, it did build up and leave us some more liquidity that the market could eventually come to run. We then started trading higher, but I could quite visibly tell that we were having supply into the market. Demand was being exhausted. Obviously the institutions there trying to absorb the demand if possible. And what we have seen is that the highs that were getting created were just really struggling to surpass the previous high in the market. Straight after that, we have that push straight back down into the POI, which then mitigates it. We have a lot of demand introduced from that POI, evident by this large move up that displaces both fractal and intermediary structure. So as of right now, we can see that we've had this push up, but what has happened is, of course, the previous low, what should have been a protected low in the market right here, has been broken. So arguably, if this high gets protected and this low broken, we are going bearish. This was a distribution. So we could see this potentially as a last point of supply of a distribution. You know, we've traded up, mitigating something within this region. We're now starting to make those moves lower. The markets are currently live. As you can see, it's currently 1:54 p.m. I am away for the weekend, so I'm not being able to do this on market close. So a few moves are likely to happen. We've just had the NFP released. You can see I had this demand zone. If we were to follow this bullishness, this was the zone I was watching. Unfortunately, that has not happened. I do have a smaller zone here. These are, however, the only two zones I could have found in this region that did seem unmitigated or relevant to me. So going to set an alert at this one. See if price taps in or does anything there. If not, I will be watching it to break this low. and we can then start looking at price trading us down into this second point of interest. So in the coming week, depending on the price action that we see that we are delivered with, we could either be looking to get in on some nice shorts all the way down here, or waiting for price to tap into this demand zone, find reversal and take in longs higher. So now onto the US dollar to the yen. This was actually a market I had a trade on, I believe, last week. I can't remember the exact date, but quite simply, we had a nice supply zone. I think it was somewhere, it was either in this region or this region. I don't fully remember now, but I was expecting that price wasn't going to want to trade all the way back up to there. And what has actually happened is that, apologies for all the annotations, but we had a major displacement. In my eyes, that meant that price was going to start running lower. Unfortunately, it hasn't really done that for us. Instead, started to trade up with high volume as well. There is evidently a lot of demand in the market. There is one singular supply zone that I can find left that I've refined on the lower time frames right at this point. So from here, we're probably going to get a nice indication of whether price is now going to start breaking structure to the upside, continue going bullish, or if we are ready for this wider scheme correction wave we've been waiting for. We're just going to have to see what price does when it trades us up into this region, whether we see some rejection or whether it pushes through. Now, if it was to push through, I have identified, or I continue to identify, points of interest along the way that price may be wanting to react to, given it does break the high, wants to then come down for a retracement before moving higher again. We can use all of that as areas to look to take buy positions from. So we just get rid of, why does it not want to let me get rid of that? Okay, we'll just get rid of these drawings. The reason why I wanted to do that is just because we do, of course, have another unmitigated position somewhere in this region. I will refine that on a later date. But just one more position we can look at for potential buys. We will leave our alert just there. So we are waiting to see what price does here. As I said, we want it to slowly trade us up into and around this point of interest. See if we get any rejection, see what price does in this region. If we have rejection, like I said, and we start seeing some fractal displacements, we may then start selling price down. But what we do have to be careful of, even if we do get a reaction in this region, there's evidently a lot of demand, and any one of these zones that has been left over could introduce enough demand to then tilt the supply and demand balance back into demand's favor. So we have to be very careful here. We know that longer term, we are still within an extremely heavy bullish run, and for us to introduce enough supply into the market to start making move low, we are going to have to see consolidation. So maybe we are either A, starting to create a wider scheme or longer term distribution in the scheme of things, looking at this as a Wyckoff price cycle. We of course have an accumulation down here, the markup, and then in order to fulfill this higher time frame balance and absorb all of the demand that is obviously present, we probably will have to see a prolonged consolidation period or region in the market here where we have to create that distribution. Like I said, absorb demand, introduce supply, and then create the markdown necessary in order to complete this price cycle. So there's two things that could happen here. We could just continue to create some nice bearish structure and trade lower, or we may see that price is now going to bind within a range and start trying to manipulate people out either side. Of course, we could make a prediction that what's actually happened here is we've had some preliminary supply, a buying climax down to an automatic reaction. What's happened then is we had some secondary tests, a sign of weakness here. We could therefore now see a upthrust to come and clear all of the liquidity set in this region, signify that we are continued bullishness, and then what's going to happen is we then reverse, continue lower, so on and so forth. So we need to be careful. We need to see what happens. Obviously, we have to understand that within the scheme of a Wyckoff price cycle, we do appear to be diminishing the demand that was in the market from the mark up. So we could either be seeing now something like this, where we're having a reaccumulation, or we're having an overall distribution in the scheme of things. The reason that is evident to me is because we're obviously having a period of consolidation where no side of the market is fully in control. We are pushing both up and back down with similar control. So just see what happens moving forward. As I said, we need to see what bias it delivers us, and when we have a bit more confirmation of what market phase, what market stage we're within, we can then try and formulate a better strategy in order to tackle this. So apologies, I have only ran through 2 markets, but as I said, these are pretty much the only 2 markets I'm going to be watching and trading. So I wanted to make sure to give everybody my outlook on those, because I'll be updating my analysis on both of these markets throughout the week. So I hope you all have enjoyed this analysis that has been sent out. Like we always say in these videos, if you are not already, make sure you do get involved into our Learning Lounge group chat. Link always in the description. The reason we advise this is because we upload and post analysis on a very regular basis. And what that does is it keeps you informed on our outlook and our predictions on the markets, which can help you when it comes to tackling them yourselves. And on top of this, we also provide lots of educational information. So if you are a trader, it's just things that, like fundamental news and little tactics, that we like to give out to make sure you're very well equipped to trade the market. So with that being said, thank you everybody for watching this Sunday sessions video, and we'll see you next week back here again.